In this video, I want to talk about financial risks. Now, we can split financial risks into two parts. Those that we can control and should avoid, and those that we can't control and have to accept. Now, the risks that we can't control but should accept, we can at least mitigate them and reduce their impact as much as possible. And a great example of that is stock market investing. We can't control what the stock markets do. They're prone to periods of quick and significant losses. And I explain more about this in my videos on diversification and investing behavior and successful investing. So watch those. But in simple terms, the more we can spread our money, our pension investment portfolios around the major global stock markets and in different assets, we can reduce the effect on our wealth of stock market crashes. And also our behavior plays a key role in this. By being patient and disciplined during stock market crashes, we can ride out those falls rather than panicking and selling out and turning paper losses to actual losses. Another risk that we can't control but we can mitigate against is institutional risk. And that's the risk of any institution that we hold our money with becoming insolvent. And the classic example of that was during the height of the great financial crash, the credit crunch, when major banks around the world became insolvent and either failed or had to be bailed out by global governments. There's much better regulation now in place to manage those risks, to make sure it doesn't happen again, but also by only having so much money with one institution, up to the Financial Services Compensation Scheme depositor limit, which is currently 85,000. We have stick to that, then should a bank fail, then we don't lose any more money. We can rely on getting that 85,000 back from the compensation scheme. Other risks we can't control are currency risks, the fluctuation in the value of pounds to other currencies like the dollar or the euro. That was felt most sharply most recently when we voted to leave the European Union, and the value of sterling fell rapidly against the euro and other currencies. And we feel that when we go abroad on holiday or we try and do business abroad, and we find that the cost of goods and services increases dramatically. So we can't do much about that. We have to accept it. From investing terms, often with funds we buy overseas are automatically hedged against the overseas currency, so that we don't have that double whammy effect of possible falls in the value of the stock markets and falls in the value of the currency at the same time. Now, another risk that we can't control but we can mitigate is inflation. Now, inflation is that silent assassin of the financial world, because it's just a creeping effect. Over time, the value of our money in real terms falls because costs of goods and services increases. The best way to mitigate against inflation risk is having our money invested in real assets. Real assets are those that increase in value over and above inflation, and stock market investing is the most reliable way to get a long-term real return on our money. So those are the risks that we can't control, but we can at least mitigate against as best as possible. But as I said, there are risks that we can control, and they're simply the ones that we just shouldn't put our money anywhere near. It might be the investment that looks like a great idea, but just isn't, that property that ends up being a money pit and we throw good money after bad. It might be that something seems too good to be true because the returns offered are so attractive for seemingly very little risk. Anything that looks too good to be true is probably too good to be true, so don't put any of your money anywhere near it. So we can be wary of those scams and those sharks who want to take our money off us. And of course, another big risk to our wealth is gambling, and a lot of people get in trouble by gambling more than they can afford to. No harm in gambling with money you can afford to lose and having a bit of a punt on the Grand National or the football, whatever it might be. I enjoy doing it myself, but you only ever do it with money that you'd be happy to lose. And another current case in point of it could be argued is gambling or speculation at best. It's cryptocurrencies. A lot of people putting money in cryptocurrencies. We don't know enough about it yet, I would say, to determine whether it's a appropriate investment. But the ways the values of Bitcoin and other cryptocurrencies is fluctuating so wildly at the moment, feels like it is a very risky area to get into. So if you want to have a punt on cryptocurrencies, only do it with money that you can afford to lose. So that was a quick video on financial risks. I hope it's been of use. If you want to look at any of my other videos, you'll find them on my YouTube channel.